Hi everyone, thanks for joining David and I for today's video. If you're a British Columbian, you own your own home, you've probably got, it's mid-June, you've probably got your property tax assessment in the mail. What if I told you that you actually did not have to pay your property tax? Today, David and I are going to look at the British Columbia Property Tax Deferral Program and look at some options that you do have there. David, can you provide a basic overview of the program?
In British Columbia, there are two property tax deferral programs to choose from. So there's the regular program and there's the Families with Children program. So under the regular program, you qualify to participate if you are 55 years of age or older, or if you're a surviving spouse, or if you're a person with a disability. Then there's also the Families with Children program, which obviously if you have a child, or even if it's not your own child, if it's a stepchild, or if you're even maybe a grandparent or an aunt or uncle looking after a dependent child, you would qualify too. And in either program, if you own your house, you must maintain a minimum equity proportion of 25% in order to participate. So you have to own at least 25% of the value of your house. And once you elect to defer your property taxes, each year you have to either renew or you can set up for auto renewal. And how it works is every year you'll get a new statement which shows you how much you owe under the property tax deferral program so that you can keep track of what your interest costs are and how much your balance is owing.
David, what are the costs involved with deferring your property tax?
So under the regular program, you are charged an interest rate of prime minus 2%. So currently, as of right now, June 2021, prime rate is 2.45%. So it's 2.45% minus 2%. So you're only paying 0.45% to defer your property taxes under the regular program in British Columbia right now. So basically next to nothing. Under the Families with Children program, you pay 2.45%, so you pay the prime rate. There's no discount for the Families with Children program, so it's still a pretty low rate, but not quite as attractive, obviously, as the regular program. Under the regular program, too, there is an initial cost of $60 to enroll in the program, and then each year you're charged a $10 fee to renew in the program. So those are some minor costs to consider as well. The other thing to keep in mind with the cost of the program is that the interest rate that they charge you is a simple interest rate. This is a really important thing to keep in mind because it's very different than compound interest. So with simple interest, you don't pay interest on top of interest. So it's really only every year you're paying interest on your principal, not on the interest that's accumulating on top of your principal. So it's different than a mortgage or credit card. It's in the long run, when we're talking about 10, 20, 30 years of time, it's actually much less expensive with simple interest compared to compound interest. Harry, what are some common reasons why people might choose to defer their property taxes?
Well, first let's look at if you're a retiree and you're just looking to boost your income. You've got some different options. Let's say you're a retiree or you would like to stay in your own home and you're having troubles, with maybe upkeeping all the costs and also maintaining your current standard of living. Deferring your property tax is very attractive because you really only have three different choices. One, you can borrow some money at the bank against your house as a mortgage. You can get a reverse mortgage, which I'm not a huge fan of, or you can defer your property tax. And if you look at the three side by side, deferring your property tax is definitely the most attractive. And this will definitely give you some extra capital because let's say, for an example, your property tax costs $4,000 a year. Well, now you get $4,000 a year more in your pocket to be able to spend and maintain this retirement lifestyle that you want to live. Instead of compounding an interest rate, you just went over the benefits of the interest rates. Well, again, if you looked at how cheap deferring the property tax was compared to a traditional mortgage or a reverse mortgage, it's definitely more attractive.
What about somebody who's approaching retirement, Harry?
David, that's also a great question. Let's say you're 55 and you're are older and you're approaching retirement, and you'd like to, maybe take some extra money and have it work a little harder for you. So again, we go back to those fantastic interest rates that you talked about. In today's environment with prime at 2.45% and you get a 2% reduction on that rate, you're actually be able to borrow money at 0.45%. So if you're able to actually take that extra money in these end years right before retirement and put it into, say, for an example, your RSP, not only will you get your tax break, let's say you're in a 40% tax bracket, you're going to get an extra 40% back. You're also going to be able to grow that money at a greater rate of return if you invest it. So you can kind of double benefit. And you can do that with TFSAs as well. So it's a great way of accumulating some extra capital right before retirement.
What about people who are just looking to build their wealth, Harry?
Yeah, that's also a great question, David. A perfect example is, let's say you're 65 and you're already retired, and your main goal is to build as much wealth as possible to pass on or transfer down to your children. Again, I'm going to go back to those fantastic interest rates that you had mentioned earlier at 0.45%. Well, if you can take money at 0.45% that you're having to pay in simple interest, and then you can take that extra money and you can invest it and have it compound and grow for you at a higher rate of return, that's going to leave a sizable extra amount of money in your estate. Why don't we take a look at an example here?
In this example, let's assume that your annual property tax bill is $5,000 per year. Instead of using today's current property tax deferral interest rate, which is only 0.45%, let's assume instead that the interest rate is 3%. Let's also inflate property taxes at 3% per year, as we know they're going to increase over time with inflation. In this scenario, your investment account would be worth $613,000 at age 90 with a 6% annual return. Your total balance owing for property taxes under this scenario would be $277,278 at age 90. This would still leave you and your heirs with a net profit of $336,177 at age 90 by deferring your property taxes.
David, are there any reasons not to defer your property taxes?
There are definitely a couple of reasons why you may not want to actually defer your taxes. If you're a conservative investor and you're only willing to invest in things like term deposits, it's probably not worth your while. If you think about it, you're deferring your property taxes at 0.45%. And if you're only willing to invest in things like guaranteed investment certificates or term deposits, there's not a huge spread between the interest rate you're paying in the tax deferral program and the interest rate you're actually getting from a bank. Right now, it's 0.45% to defer your property taxes. And in today's environment, you're probably getting 1%, maybe 1.25% if you're lucky on a 1-year term deposit. And so there's not a huge spread there between what you're paying and what you're earning. And so it really may not be worth your while to go through the process of setting this up. The other reason why you may not want to do it is if you don't want a lien against your property. So basically, when you enroll in this property tax deferral program, the BC government sets up a charge against your property, or a lien with land titles, which basically restricts your ability to use the equity in your home as freely as you may wish to. So when you set up the property tax deferral and the province sets up a charge against your property, this limits you from doing things like adding someone onto the title of your property who isn't your spouse. For most people, that's not advisable anyways, but that's a separate conversation. Removing someone from title who isn't deceased. So again, if you have a marriage breakdown or something like that, that could pose a bit of a problem. Or refinancing with your bank. So if you set up this property tax deferment and then you decide that you want to take out a mortgage in the future, you're going to be limited in terms of doing that. You would actually have to pay off the balance of your property tax account, and then you could go to your bank and get a mortgage. However, one thing that you can do is prior to setting up the property tax deferral, you can go to your bank ahead of that point in time, get a line of credit or a total equity plan, some banks will call it, so that you've got maybe $200,000 or $300,000 set up ready to go at a moment's notice. And then you set up the property tax deferral. And then you don't really have to worry about the lien as much. But definitely, if you do the property tax deferral, just be aware that there will be some restrictions in your freedom to use the equity in your home from that point forward. We hope you found today's video interesting and informative. It's interesting to note that for British Columbians, the property tax deferral program that we have here in BC is quite attractive. If you look across the country, there's a lot of provinces that offer something similar, but not quite as good as here in BC. If you look at Ontario, for example, you have to be 65 years of age or older in order to participate in the property tax deferral program there, whereas BC it's 55. And also it's income tested. So many people, it's really only for lower income retirees who can participate in Ontario. In Alberta, it's again 65 years old, so 10 years older than here in BC before you can participate. And their interest rate is 2% higher than here in BC. So we do really have it quite good here in BC in terms of the property tax deferral programs that are available. So if you are looking at ways, as we've mentioned, to either boost your retirement income, maybe put aside a little bit more money pre-retirement, or to build wealth for your future generations in your family, the program that's offered here in BC really is something to look at because a lot of other Canadians across the country don't have this advantage set up for them.
As always, Dave and I are here for you. If you have any questions, please don't hesitate to give us a call. Stay safe.